Hello and welcome to the Uptown Syndication Asset Management Investor Update for Cedar Mill Courtyard's Apartment LLC. We're going to take a peek at the P&L and compare to the pro forma. I've got Trent and AJ with me. Why don't you guys say hi?
How's it going?
Hey,
All right. We do have a couple updates on this property. We are experiencing a little bit more vacancy than we want. So we'll start off with the rent roll. We are 85% occupied, and yeah, we currently have seven vacant units. One is rented out. We've got somebody moving in September 1st. We have three bedrooms that are vacant and 3 2-bedrooms. Actually, no, is it 4 2-bedrooms?
no, three 2-bedrooms, three bedrooms, and the one is rented.
Yeah. Okay. So we've got a couple 1-bedrooms coming up. One on Saturday. But the 1-bedrooms are renting a little more quickly. We did just lease out one of the 2-bedrooms for $13.95, which is less than what we want to rent for. But what can you do? Okay. AJ, do you have any thoughts on the rent roll?
No, it's just been kind of an unusually slow season there. No, I don't have, I mean, my thoughts are in absorption and market stuff, which I'm happy to go into, but I think you want me to do that later.
Yeah, for the 3-bedrooms, we have a tenant almost at $2,000 per month. We've got one at $19.95. And then for our 2-bedrooms, we've got one at $16.95 all the way down to $13.45. And then for 1-bedrooms, $13.11 down to $10.44. So we have a really wide range of rents for the property, and yeah, it's we've got yeah, we can get plenty of tenants up to market rent. We probably need to try and aggressively sign leases with some of the tenants that are, higher up maybe offer them some concessions to reduce turnover costs. So let's chat about the income statement and the pro forma. So let's get to the trailing 12. That we were looking at year 2 right there, 796,000 of income. But let's peek at the trailing 12 so that we can kind of see into the future how we think the property is going to run. We're at 802,500 bucks for income, and then for expenses, we are at 248,000. 72,000 of utilities. That's a majority of that. Property tax. That might be a little bit higher. It looks like we're missing 1 month. So it's probably 56,000. And management fees, probably about 7%. We should take a peek at, yep. And so we lowered management fees for the property since we brought in an on-site manager. And repairs and maintenance, that's about $1,000 per unit. Past couple months though, I think we're going to be charging significantly less. We just let a maintenance manager go who was using really expensive vendors for multiple different trades. And so I think we're going to see a trend improve there. Yeah, all in all, expenses at 248. Let's take a look at the pro forma we're essentially in year 2. So Year two, we were hoping for an average of 1716 for rent, and basically we did not get there. We got to 802,000, so we were $100,000 off on that property. But when it comes to expenses, we beat expenses. And then in terms of operating income, we're at 554, and the NOI for the property is for the pro forma was 608. And so all in all, we're only about $54,000 less. Unfortunately, this past year we did run into a couple unfortunate situations with CapEx. We ran a much larger CapEx and legal bill for CapEx of 100K and then legal of roughly 50K. So 150,000 of CapEx or one-time expenses, and that brings our net cash flow to 211,000. And so if we look at the pro forma, that puts us $180,000 off on our cash flow for the year, which is pretty significant and very unfortunate. Partly due to being $100,000 off on income, which is something that I would say is out of our control. Some of the CapEx costs and the legal that's stabilization of the property. We did have a water main break. Yeah, Trent, do you want to chat about what exactly happened with that water main break at the property?
Yeah, so as Chris said, a water main line broke, it burst, was flooding into a unit up at the top of the property. Urgent response plumbers were then contracted to do the work. They stopped the leak, and then there was a mitigation component associated with the water damage that had been done. Ultimately the project got taken care of. At the end of the day, it did cost about $70,000. So of that $100,000 CapEx number, 3/4 of it were from a water main bursting. So like Chris said, it is an unfortunate event and hard to.
Something that's not going to happen again, unfortunately. So, yeah. And then as well, we experienced multiple legal issues at the property, a couple evictions, and essentially a few things that we had to settle. We had a tenant take us to arbitration, and she wouldn't, I guess, negotiate a settlement before arbitration, and our attorney at arbitration said that he couldn't believe the result that we got. And so in that appeal, we were able to appeal, and then we settled the issue. Essentially, the tenant was disputing that the lease that she had signed, that since we did not send it to, or since the property manager before us had not sent it to Washington County, that therefore we owed her damages because we tried to charge her based on the lease that we had received from the other property manager, and
she had signed.
that she had signed. So all in all, it would have been significantly more expensive for us to litigate and with negative outcomes. And so that was just a small piece of multiple legal situations, whether it's evictions or just like others like tenants complaining about us implementing utility bill back. And we did implement utility bill back at the property. We were projected 72,000 of utility bill back, and we collected 57,000. So if we didn't implement utility bill back, we probably would have had less legal. We wouldn't have had any legal bills. But in the end, we came out ahead, $16,000 plus all of the future income. And going forward, there's just going to be less problems as Washington County kind of figures out its legal issues. AJ, do you want to talk about the eviction situation?
Sure. So over at another property, we had a eviction. I mean, most of Washington County right now, it's 3 to 4 weeks for a first appearance. And normally in the past, we'd see maybe a month after that would be the court appearance. So it was first appearance and then court. Well, recently it's now they claimed originally that they had a bunch of murder trials, and so it's been moved out. Like after the first appearance, we're looking at 3 to 4 months. So our timeline for evictions has pretty much tripled, and that's been pretty bad. I've also heard a rumor from some of our lawyers that they are doing it on purpose to provide pressure for the public to get them a new courthouse. So there's a new courthouse on the bill. So they are looking to get some new digs.
Okay. Washington County is significantly worse than Multnomah County at the moment, unfortunately. So yeah, let's project out into the future. I guess one bright spot that we've got is this reserve escrow balance and property insurance escrow balance. Both of these funds should potentially come back to us. And so if we do get those, we will disperse them because we're essentially Courtyard is stabilized. So we're keeping, I think, roughly $50,000 in the operating account at all times, just in case, if we need to do a unit turnover or, and so hopefully I've inquired about getting these escrow funds, released. So that's a bonus. Yeah. Okay. Let's take a peek at what we think is going to happen in the next 3 months, or sorry, in the next year. So the way that we've been doing this is by looking at the trailing 3, and just kind of projecting out into the future. So 44,000, actually no, 58,000 in rents. We're getting a decent amount of Section 8 rent. And then, roughly we're seeing about 198,000 in total operating income. That's essentially putting us right at 800,000 for the year. And this is kind of in line with the difficulties we've been experiencing in renting. And yeah, so looking at that, but I do believe that our operating expense will be lower. So we're going to be looking at about 600K of net operating income. And then, yeah, hopefully we can keep this remodel and turnover costs down significantly, where this is looking like 21,000. But this month of May, we did have a very, very expensive month, and I don't want to throw my old maintenance coordinator under the bus, but he had, yeah, we put some new controls in place so that property management would not be making decisions on large charges for us. So if you can see, we didn't have any large charges except for ones that were approved by me. And that's how it's going to be going forward. So yeah, I think going forward, we're going to have significantly less expenses. Unfortunately, the income side is not looking that rosy as of right now. So
right now, no, but the part that I want to talk about is the market. There's been some news that Portland came out and waived 5,000 units SDC fees. So that's encouraging development. And the reason that they're doing that is because there's literally no pipeline of new development for multifamily units. So we all know economics, and when there's a lack of supply. So currently Portland has kind of a 2 to 3% population increase over the MSA. Additionally, a 2 to 3% jobs increase over the MSA. People are continuing to move here, so there's net in migration. And so when those current units that are finish up, so pretty much like all the stuff in BDS as business building development services is finishing up in the next like 3 to 6 months. Once that's absorbed, we anticipate seeing a large rent increase opportunity, just as the demand goes up and the supply goes down. We anticipate seeing rents start to jump up. Additionally with inflation as well, people are making more money, able to pay more, that sort of thing. So.
Yeah, I agree with AJ. Rents have essentially been flat since 2022. And the longer that rents stay at the same level, the higher the likelihood that we're going to see a huge jump. So we can't predict that it's going, we're going to see a huge jump in rents. Next year or the year after, but like during the long-term hold of this property, we are going to see a large increase in rents, and the numbers will look significantly better. Once the market turns. So, yeah.
Overall, the property's producing cash. We know returns aren't where they need to be, but we believe that they're going to be improved upon in the coming years. And so it's a long-term hold, and we will certainly get back up to and caught up.
Yeah, on the preferred returns, and all of us are confident that the property will perform, and we'll get back on track with those preferred returns. So thank you. Yeah.
All right.
All right.
Thank you.
Bye-bye.
Have a good day.